New York, January 7th, 2026, 16:38 Eastern Standard Time. After the closing bell, Broadcom barely blinked. Shares were last about down 0.1% in after-hours trade, a whisper more than a wallop. That tiny move looks sleepy on the surface, but don't be fooled. Underneath that near-flat close is a story with four big acts: a bond sale, a mega backlog, AI margin drama, and the macro calendar hello payrolls. Every actor on that stage can move the tape in a hurry. The bond deal, $4.5 billion, four tranches, coupons up to 5.7%. Big headline: Broadcom put firm pricing on a private offering of $4.5 billion of senior notes, for tranches of long-dated corporate debt, with coupons reaching 5.7% on the longest maturity. The company disclosed pricing on the term sheet, and the documents show the breakdown. One tranche priced at 4.300% due 2031, and three others sized at $1.25 billion due 2033, 2036, 2056, with coupons of 4.600%, for 0.950%, and 5.700%. The filing, a pricing term sheet / prospectus supplement, is the legal plumbing that makes the deal real. Why does this matter? Because Broadcom isn't just selling chips, it's managing a corporate machine with capex, buybacks, acquisitions, and debt. Pushing out long-dated debt shows confidence in long-term cash flow and locks in funding while giving investors more yield than treasuries. The notes were priced at spreads of roughly 60 to 88 basis points over comparable U.S. treasuries. That spread is the extra compensation investors demand for corporate risk. Broadcom said the proceeds will be used for general corporate purposes and to repay debt. The prospectus describes the notes as unsecured and unsubordinated obligations, meaning they're general creditors' claims, not tied to a single asset. Think of it like this: Broadcom just borrowed a big chunk of cash at locked rates so it can play offense and defense, fund growth where it wants to, refinance expensive debt where needed, and keep capital options open. The bond market is essentially putting a price on Broadcom's creditworthiness, and the market gives the company a respectable grade. Ratings agencies chimed in with investment-grade views. That's not casual praise. It's part of the story investors read every morning before deciding whether to own a $300 stock. By the way, if you are getting some benefit from this content so far and want more like this, like the video, it means much to us, and hit the subscribe button and comment the word more. Just go ahead and type the word more, so I know. Now that you have commented, let's continue. Why traders are watching January 13th and the payrolls. Two immediate calendar items are making traders check their phones every 5 minutes. Settlement of the notes, expected January 13th, when the bonds actually settle in cash flows. A clean settlement means the deal executed and Broadcom walks away with a vault of freshly raised money. That matters because liquidity events can alter free cash flow profiles and debt servicing assumptions quickly. Friday's U.S. payrolls report: macro prints move risk assets. A hot payrolls print can harden the higher-for-longer Fed narrative and push yields up, compressing tech multiples. A soft print can turbocharge multiple expansion. Broadcom is a tech-adjacent giant, so it reacts. Traders line up catalysts like this because the difference between a 0.3% yield move and a 1% move can change valuations by billions. In short, one is corporate mechanics, the other is macro theater. Both matter for the stock. Combine them, and you get a high-volatility recipe. The market's mood, mixed indexes, AI overtones. On the same day, market internals were mixed. The S&P 500 ended lower while the Nasdaq finished higher, buoyed by AI-linked megacaps. That divergence is telling. Big AI names, hyperscalers, chip leaders, still carry a gravitational pull that can lift the Nasdaq even as broader parts of the market cool off. Jake Dollarhide put it bluntly: rumors that the AI trade was done turned out not to be true. Traders heard that, and many hit the buy button on AI exposure. But not everyone is convinced the party is intact. Why the split? The S&P is broad. It captures industrials, energy, regional banks, areas sensitive to macro. The Nasdaq is tech-heavy and driven by narratives. AI is the current narrative. So when investors debate is the AI wave sustainable, you get exactly this pattern. Nasdaq up, S&P flat or down. Broadcom, straddling hardware and software, gets tugged by both rhythms. The backlog, $73 billion, and the hydra of customer concentration. Now the meat. Broadcom has been candid and controversial about its AI backlog, a headline number that management pegged at roughly $73 billion to be fulfilled over upcoming quarters. That backlog is a showing of hands. Customers ordered gear, and Broadcom has a delivery list. But the backlog has a second feature that makes analysts sweat: customer concentration. A huge chunk, estimates often point toward 40 to 50% of Broadcom's AI revenue and backlog, ties back to a handful of hyperscalers, think Google, Meta, possibly large cloud providers and AI labs. That concentration is a double-edged sword. On one hand, it means huge orders and visible revenue. On the other, it means if one hyperscaler pauses, pulls back, or builds in-house, Broadcom feels it hard. Imagine you're a boutique maker of stadium speakers and 3 major stadium chains buy 80% of your annual production. Great for order books until one stadium chain decides to build its own speaker system. Suddenly, your future looks very different. That's why investors nitpick the details of customer mix. They want to know which customers are visible, contracted, and unlikely to cancel. Margins, the tension every analyst nervously watches. Here's the rub. Broadcom's AI products, custom accelerators, networking systems tailored for AI data centers, often carry lower gross margins than some of Broadcom's higher-margin legacy businesses. Think software subscriptions, enterprise licensing. Management has said this straight. AI revenue is growing fast, but the mix shift means gross margins could soften as AI becomes a larger portion of total sales. Investors who expected AI to be a cash margin miracle felt a bite when management reiterated that the margin profile will change. That's the headline investors pounced on in December, and what's keeping Broadcom volatile. If you sell bespoke racing engines that yield 30% margin, and suddenly 60% of your revenue comes from selling thin-margin mass boxes, your overall profitability drops. It's not that the new business is bad, it's just structurally different. The market values the mix and the trajectory. If AI revenue grows, but margins compress meaningfully, the multiple can reprice. Note this as well. Fear God and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven and earth and the sea and the fountains of waters. And there followed another angel, saying, Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. Revelation 14 verses 7 to 8. I implore you to fear God and obey His law, for the time is near and judgment is near. Worship the true God, the creator of heaven and earth. Want more information about the book of Revelation? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more information and insights. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's protection and care. With God, all things are possible. Luke 1 verse 37.